What is going on, guys? Welcome back. It is Institutional here, and we are back with another video. Today we're going to cover building data. We do these videos, at least we try to do them once a week, and the purpose of this is so you can understand the proper way that you're supposed to be backtesting on what you're doing on an everyday basis. When you're looking at charts, and if you miss setups, you want to understand, well, why did you miss that and why didn't you take that trade? So it is the 21st of June. So now we're going to be studying and seeing what price action does tell us when today price moved, right? The part of building data is understanding, where could price potentially go when we're looking at areas, right? Or where has price done for today in terms of our AM session and our PM session. So we're gonna go ahead and start that off. And our PM session is gonna be from 8:30 all the way till 11. And then from 13, which is 1, all the way till 16, right? So here's your morning session, here's our PM session. You could extend this 11 if you wanted to all the way to 12, that's fine. You have the ability to do so, but the algorithm does start running again at 1 to 1:30 is when we actually start running again. And you can see how that actually happens right here. You have it, price comes down at 1:30, it drops down, it grabs a lot of sell side liquidity, and then it goes up higher, right? So now studying that, you want to mark off, well, what has happened throughout the day. So if we take a look here, you want to mark off what happened through New York session, or what happened at the midnight open. If you look at the midnight open, this looks very clear to me. What they did today was they brought price down, so they gave you that Judas swing, right? And then they brought price back up higher. So that would already set you for the dealing range for the day. Admittedly, so today I was a little bit confused because I was looking at both my Asian session and my London session, and I wanted price to come back lower to here. But I should understand that once price comes down like this through London, it's already giving me a hint that price wants to go higher, right? We already have our dealing range like this. So having that in mind, this could be, or this is in fact my dealing range low, and this is right here my dealing range high, right, for this day for S&P. So now I want to understand, well, what is price doing? If we take a look at price, it looks like here we're making that 3 drives pattern, right? So let's drop down to the M15, M5, sorry, but we also want to look at where potentially could we be looking to capitalize from here if we have POIs. Again, this is of course, this is hindsight, but you start kind of training your brain to see these things on an everyday basis, and that's how you become a better trader. Seeing, so you will mark this off from premium to a discount, and you will tell yourself, of course, this is my discount, so I want to look to see before price does drop down here, right, where could I capitalize from in this area here? And if you take a look to the left, well, here you have a very clear as day fair value gap on M15, so that is your POI where you have complete focus on. And I did go over this with my students, but the problem was that I was looking more for bearish price action because, again, the reason the way that we went down, I wanted to see price come down lower, but I'm going to show you guys how you fix your mistakes and how you start looking at price when you are wrong. Again, this is part of the building data process. So if you take a look at price, comes down here to your discount, so you go ahead and mark that off. When you're drawing your charts, you want to make sure that you have as much as possible. So when you does come to the next day, you have as minimal as possible, but you already understand what price is doing. So if we take a look now at the M5, we can see here is that what actually happens is we come back down to this POI and we get a push up higher. So we get a displacement leg up higher, right? We get that. And we also take a look at that 3 drives pattern. So what is the 3 drives pattern? Where price has stopped the retailer out a couple of times, so you're able to capitalize from that. So here they were looking for longs, they got stopped out. Here they were looking for longs, they got stopped out. And here again, they were looking for longs and they got stopped out. So you get that 3 drives pattern where you can capitalize from. And if you take a look now at this price action that we developed right here, right? What do you see here? You see your model. So price comes up higher, gives you a higher high. And now you're looking for something in between this discount, because this is already the overall range. You can go ahead and delete that. You're looking for something between this high to this low where you can actually capitalize from, right? Because you already have that entry. If you take a look at here, this is where you get that trade, right? So you get your trade right here. Here you have your fair value gap. Here you have your fair value gap right there. So you can go ahead and delete this POI. You can go ahead and mark this off, fair value gap, and you have an OB. So having this context in mind, go ahead and mark this off right there. You have your fair value gap plus your OB. And now having this context in mind, all you're looking for now is your price to come up higher to grab what? To grab the liquidity that we're resetting above right here, because their dealing range is from this low to this high. So what you would have for this specific day, this was at 850. You would have your entry right at the 50% right here. You would have your stop loss below your order block, and you will be targeting the highs above right there. And that would have been a nice little 3.7821. That is all you need. But for my example, right, I missed both trades today, but I'm showing you guys how you could have fixed it and basically what I was looking for and how you, again, start building that data. So I'm gonna start building this data, apply this to my journal. So next time I'm looking at the market, understand that this is actually a 3 drives pattern. I was a bit more confused on this because I thought that this could have been more like a bull flag, but if you take a look closely, we already grabbed the liquidity over here. So once you grab the liquidity, retailer is gonna be looking to actually short this, but they bring price back up higher, and then they don't bring price lower. So this would have been the retest, right? If you look at price like this from this angle, this is more ideally what they were looking at. So you have this trend line right here, you have this trend line right here, right? You can see how price actually comes down. This is a pretty bad trend, and I'm bad at drawing them, whatever, but you get the hint. So price comes down, breaks structure, right? It comes back up, gives you that retest to resistance, support, turn resistance, right? And then it comes down lower. So they're anticipating price to drop lower here. In fact, what we did was we made a higher high, the straight line with a fair value gap. So they already gave you a hint that price was to go higher here. And then they bring price all the way back up towards this range to make sure it stops everybody out that was actually able to capitalize from the short here, here, and here, because in London, we already got our Judas swing where they want to bring price up higher. So what did we got today? We got price dropping down here. We got price opening up. So we got the manipulation, and now we got the close up here, right? So what we wanted to capitalize from, we saw this drop down, which is this. We want to be looking to capitalize down at the equilibrium, which would have been over here, which is where? Right here, right? And that's what we got today, that power of 3 pattern. Now, moving forward, if you were to miss that, now you want to see, well, what happens through the PM session and where can I capitalize from it? Well, let's take a look at what price does. We'll delete all of this. Now, looking at price, you want to drop down to M15, drop higher, and you want to see where could I see here? So obviously here we are overbought, but you want to take a look at, obviously since we're overbought, does price really want to come back down here? Not really. So why not? Because they're not going to allow the retailer to be looking for these sells. They're going to want them to get induced, and then they're going to bring price up higher to make sure they get stopped out. So what is this? Equal highs, right? So you can go ahead and mark that off as a level where you have your eyes on for buy side liquidity, where price will most likely come and tap into that to grab all pending orders or retailers that were able to actually capitalize from that. So looking at this, let's drop down to the M5. If you take a look at the M5, right, what can you see right here? You can see how price makes a high low point in the morning session. The lead says higher high. So this would have already been your context of where you're looking for a discount to actually capitalize from this range. So here, what do we see? Clear as day, right? Clear as day. What do we have right there? Very nice and solid fair value gap. Sorry, that was M4. Very nice and solid fair value gap on M5 right there. So what do? You go ahead and you mark that off, right? This is your POI where you can capitalize from. Now you could do this one of two ways. Problem is that this is already 12 p.m. So yes, you could have taken a trade from here because you understand that price is going to continue going higher. So you could have had something like this, stop loss here, and target these highs for a nice little 2.5 to 1. And this would have been kind of a trade you would have taken if you would have taken a loss for the day. But since there was really no opportunity to take any sells here, you didn't take a loss for the day, then you're looking for more confirmations here. So if you look at price, what does price do here? In fact, it mitigates this. So that's already giving you context that price does in fact want to go higher in this PM session range, right? So what you do now is you want to look at what type of displacement legs could we get now that we mitigated from this low to this high when it comes towards that 1 p.m. open all the way to that 1:30, right? Or even lower going into session. So if we take a look at here, right, we can go ahead and just put this to 1:30. We take a look here at 1:30. You want to look at some sort of displacement lag between these ranges. So if you look at here, you don't really see any fair value gaps here, right? So you drop down to the M4. Where do you understand that we have context behind this fair value gap being mitigated? So we understand that prices will go higher, we develop a higher high, and now we're looking for something in this range that tells us that price wants to continue going from this low to this high, right? And now mark that off. So drop down to the M3. Is there really any context here that's telling you that price wants to go higher between those ranges? Not really, you can't really see much. So we drop that again to the M2. When we drop down to the M2, what is price doing? Really nothing much Here you can see though that we have grabbed a little bit of liquidity. So price drops down and makes us equal highs. Now we come and grab all of this pending liquidity down here, and this is roughly at 2 p.m. So what does price do? It makes a higher high and it induces more liquidity right here. So having that context as well in mind, what you're looking for now is some sort of fair value gap between these ranges. This is admittedly why I didn't take this trade, but you can see how price actually, in fact, does come down to this order block right here, taps into that clear as day, and then what does price do? Doesn't really give you a fair value gap, which is why you can't really take anything. And the M1, let's see in the M1, again, you don't really get any type of fair value gap in this range here. So what does price do? It comes down, it again mitigates this, so it grabs all liquidity here, comes up higher, so it mitigates that as well. And then here is where you actually get your entry. You can see here clear as day in the M1 where you have a fair value gap right here from this high to this low right there. Very clear. You have your order block down here. So you have dual mitigation, you're following with price, right? And you understand that you again have what? You have that buy side liquidity above right here. So what you would do for the day, you would put your longs right there. You put your stop loss below this order block, and you're targeting the highs right there for a nice little 3-to-1. And that's again how you're looking at price and how you should be drawing price when you're understanding it, building that data to understand that even if you weren't able to catch this trade, you could have catch this one. And even if you weren't able to catch this trade down here, you're able to catch this one and this one. So price is always giving you opportunities, right? We had 1 opportunity, 2 opportunities, 3 and 4 opportunities for this day to be able to look for longs when price was going higher. So you build that data. Even if you were to miss that trade, again, you're building these building blocks on your brain so you can understand it the next day around. Now, one thing that I wanted to show you guys today, where you could have capitalized from this, is if you take a look at both of these at US 500 and we take a look at US 100, it's also very clear as day what price is hinting to you. So you can see how here we actually make a very clear S&T level. We make a higher high in this range, or we have already mitigated this value gap. So you're already getting a lot of context to understand that price is actually becoming weaker and it does not want to go lower than that. So you can see out here, we made a higher low point that led to this higher low point. And here, in fact, we did the same thing, but what did we do instead? We made lower high. So look at this, higher low points, but here, look to the left, what did we do? We made a higher low point, and here we made a lower high point. So this is telling you already that US 100 is weaker, and all that, I mean, US 500 is weaker, and US 100 actually just wanted to grab liquidity down here before it goes up higher. So you want to be looking to trade this because this one has already grabbed liquidity, so most likely won't come above. But you can see how this one, in fact, does come down and then grabs all the liquidity pending above right here. So another video for you guys on building data, and I hope you guys learn a little bit from it. I will see you guys in the next one, and safe trading, guys. All right, take care.